Hello, everyone, and welcome to our webinar today on recognizing tax scams. And we want to recognize these things because we want to avoid them like the plague. These things are going around like crazy lately. Those of you who are on my list have know I'm on a bit of a tear lately. This stuff is really starting to piss me off, and so I'm going to rant and rave a little bit today. I was a longtime government tax attorney, and I prosecuted tax scams and abusive transactions. That was my job. I mostly prosecuted the giant corporations that were doing it, and I didn't feel too sorry for them because they knew what they were doing, but I did prosecute some individuals as well, and very often they had no idea. They thought what they were doing was perfectly legal and okay. They were just sold a bill of goods. And I felt bad for them. They were still in trouble because they broke the law, but I felt bad for them because you don't know what you don't know. And if you're not a tax expert, it's really hard to spot these scams. Some of these things sound pretty cool and sound great and sound legal, and the people that sell these scams have the real slick sales presentations. Man, they are good. They know how to push your buttons, and they have flashy webinars and all kinds of numbers and laws that make it all look super cool. And they know how to take advantage of your anxiety and lack of tax knowledge. And I want that to happen to more people. So I have my puppy with me today at the office. Sophie, come back, honey. So she may bark a little bit as people walk by the doors as well. She'll probably show up on camera at some point. She likes to be the center of attention. So before we get started though, and I do this, those of you that have been on my webinars before know that I always do this, whatever I'm talking about. I want to get in touch with our emotions and how we're feeling. Because as much as we would like to make decisions based on logic and evidence, and I teach courses on that too, the fact is we're all pretty emotional beings and emotional decision makers. So if we don't get in touch with that, if we don't acknowledge how we feel about something, it's pretty hard to learn something or change our mind. So I would love to know, when you guys think about dealing with taxes, how does it make you feel? Don't think about it too hard. Just do word association, vomit it out. You can drop it in the chat or you can unmute and let me know. But how do you guys feel when you think about dealing with taxes in your life and your business? Are they good feelings that come up? Anxious feelings? What do we think? Tony says overwhelmed. That's pretty typical. I get that. Look, I'm a tax lawyer and I get overwhelmed doing my own taxes, right? So I get it. Oh yeah, Phil, like to learn, right? Because I mean, learning is great, knowledge is power, but the paperwork is a huge pain. Again, I don't like doing my own tax paperwork. I've had clients who are like, "Oh, you're a tax attorney. Can you do my taxes for me?" And I'm like, "Yeah, if you want." But then I quote them some outrageous rate I know they'll never pay because I don't want to do it. And if they do end up paying it, well, fine, Rula, anxious, for sure. I get that. So Jack and the Beanstalk. Remember, Jack wanted to, he's trying to help out his family. He's a good kid. But he, he wanted to shortcut a little bit. So he bought the magic beans. He was supposed to, he was sent out to buy stuff for the family farm, and he bought the magic beans instead. And so he planted the magic beans and they grew a beanstalk, and he goes up and he finds what? The hungry giant, right? Who tries to eat him. Well, and then Jack is able to outsmart the giant, get away and get all the riches and live happily ever after. So for Jack, it worked out okay. But if you get magic tax beans, it's not going to go so well for you, right? So watch out for shortcuts and magic tax beans, because when you go up and find the hungry giant, there's someone like me at the top. A government attorney who doesn't, who frowns upon abusive tax transactions and tax scams. You're not going to get away so easy like Jack. So watch out for the magic tax beans. And the problem we have when we don't have knowledge of taxes and when we don't feel empowered, we have problems we don't even know exist, and they just kind of fester. By the time you realize what's going on, it's often too late. It can be years later before you knew what happened. We get a lot of anxiety about getting in tax trouble. The fear and anxiety about getting in tax trouble sabotages our ability to build our businesses, build wealth, and earn income, right? Because we don't want to attract attention. We're scared of the tax man. We're scared of a big tax bill. Well, that becomes sabotaging ourselves. When we don't understand how the system works, we're very susceptible to getting fooled by these scam artists who want to sell us the magic tax beans. And then we're not taking advantage of the benefits the tax system might have to offer. There are a ton of ways to save taxes legally. It's so much easier to save taxes legally than it is to do it illegally. And yet people are doing it illegally all the time, all over the place. On the other hand, if you're knowledgeable and powerful, you can eliminate problems before they get out of control, recognize them, fix them, eliminate them. You have a lot more confidence You're not worried about being visible because you understand how things work. So you're building your business and building wealth and building income safely without fear. We're avoiding hucksters trying to sell us some magic tax beans. And we're using the system to reduce our tax liability legally, which is the ultimate goal there, right? So as far as what you can expect from today, we're going to talk about some specific examples of common tax scams that are going around right now that I see currently that I would like you to avoid. We're going to talk about what are the warning signs and red flags for bad tax advice that you should watch out for, and why following the rules, just following the rules, is going to make things so much easier on you. You're going to grow and scale your business better. You're going to help more people. You're going to make more money, right? And for those of you to stay, we'll have an opportunity where you can hear about what I'm doing now for more honest guidance on how the law really works, to stay away from the hucksters and the scam artists. And if we have time at the end, we can do some Q&A as well. For those of you who are a little bit new, haven't been on my webinars and my courses before, I'm Ian Foster. I got my law degree from UC Davis a long time ago, late 90s. I'm a licensed attorney in the state of California. I'm an active practicing licensed attorney. I do have my own law firm. I do practice. I don't just teach courses. That's something I always watch out for. Watch out for legal experts teaching you stuff who don't actually practice law. I do practice law actively now and have been for over 20 years. I spent nearly 2 decades in government service in multiple government tax departments. So taxes are my jam. This is what I do. I have a lot of experience where I audited, I investigated, and I prosecuted the tax scam artists and the tax shelters and the abuse of tax transactions. And now my life of service is more about trying to pass on this legal knowledge to you guys, pay it forward, basically, help people out with all that experience. As an attorney, I have to do my little legal disclaimer. So before we get too far, remember this discussion does not constitute legal services or advice. This is educational in nature only. This talk represents my opinion only on these issues. My opinion does not necessarily represent other people's opinions. In fact, you will find people who disagree with me on this stuff, and that's fine. The main difference between those who would disagree with me on some of these scams are they didn't work for the government, and I did, and I used to prosecute these things. So I saw it from the government side, and I used to be the one issuing the assessments and the penalties. I cannot guarantee you any specific outcomes or results. There's no guarantee, of course, that you can avoid any specific investigation or audit or successfully defend it or achieve tax savings. And just be respectful of one another on here. I want this to be a safe space for all of us. Try to respect everyone's privacy, though I can't, of course, make any absolute confidentiality promises. This is being recorded. There will be a replay of this. All right, so let's look at examples of common tax scams, right? And some of these common tax scams, they're a bit like card tricks. Sometimes that's how you can kind of tell it. You feel like the cards are being shuffled by a dealer who has sleight of hand and can stack the deck. So one that's very popular right now, and some of you know that I've been on a tear about this one specifically because this one is going around like crazy, is having your business rent your house. Now, by itself, there's nothing wrong with that, right? You can have your business rent your house. That's legal. So it's not a crime or anything. You just have to have a legitimate business reason for doing it. And you have to document everything and report everything properly. If you do all that, this is really not a big issue, right? What's not legal is creating tax deductions out of thin air without reporting the corresponding income. So you may have heard of something called the Augusta Rule. It's kind of the colloquial name. That's not the legal term for it. The legal term is a code section, a bunch of numbers and letters that are not interesting. But the colloquial term for this is the Augusta Rule. And it allows you to rent your home for up to 14 days in a year without reporting the income. As long as you rent your home out for 14 days or less, you don't have to report the income. In general, there's always exceptions, right? You don't have to report the income from the rental. You also don't report expenses. They just kind of treat it as a wash because the government doesn't want to deal with the paperwork. They don't want you to have to deal with the paperwork. So here's what people are doing. You know, let's say I think the rental value of my house is $1,000 a day, just to pull a number out of thin air. And so you're going to have your business rent your house for $14,000, $1,000 a day for 14 days. Your business then claims a $14,000 business deduction. And then under the Augusta Rule, you don't report the income. It's like magic, right? You've just created a $14,000 tax deduction, but you're not actually out $14,000. You haven't actually had to outlay that cash to a third party. Boom, magic $14,000 deduction. Now, what's the problem here? Does anyone have any ideas about why I think this might be a tax scam and why it doesn't work and what's wrong with it? Any ideas? Drop it in the chat or shout it out. So the big problem here, what do we see? Could be charging too much per day, right? I mean, there's the amount, right, Phil? You have to now, you know, let's even assume that $1,000 is the fair rental value of your house, given, you know, where you live. Let's say if you were to put your house up for rent on a rental website, that's what people would pay, you know, even if we assume it's a fair rental value. The real problem here is you're just paying money to yourself and taking a deduction for it. This is similar to what we call a circular transaction, where the money just kind of goes around in a circle. And it's not clear that there's a real legitimate business purpose for renting your house to yourself. So you got to ask yourself, would I still do this without the tax benefit? Tony, it seems overtly wrong. Yeah, I mean, it does to me too. It seems obviously wrong to me. But there are so-called tax experts and wealth building experts who are actively promoting the scam, probably literally today. I mean, this is a very common one going around. I even have seen a former IRS agent promoting this scam, and that is someone who really ought to know better, because I used to prosecute when I worked for the government. I used to prosecute transactions almost exactly like this. I mean, it's obviously illegal from the government's point of view. So I was pretty surprised to see a former IRS agent promoting this. Right? But it's, you know, just paying money in around a circle to yourself and taking deductions for it is just not allowed. That's kind of tax law 101. And you have to have a legitimate business purpose. If you know, you may have a legitimate business purpose for renting your house to your business, but you're probably gonna have to report the income on it. And you're gonna have to document properly. You're gonna have to have a lease agreement in place. You're gonna have to analyze the fair market value and justify it. You're gonna want to deduct expenses. There's gonna be a whole hassle related to it, right? And normally you wouldn't rent your house to your business. So like in the example I heard, someone was like, well, for my Christmas discount for my business, you know, I'm going to do Christmas discounts. I want to do a Christmas photo shoot. So I'm going to do a photo shoot in front of my Christmas tree in my living room. And so I'm going to rent my house to my business for 2 weeks at Christmas. Well, that's crazy. You're still using your house for personal reasons at Christmas time. There's no reason to rent it to your business. You can just do the photo shoot. It's your house. You can do whatever you want, right? You would not engage in this if it were not for the tax benefits. Another very common one going around has to do with having your business pay your kids. And you guys have probably heard this one. Now, again, by itself, this is totally legal if your kids are doing actual work and you document everything properly and report it properly. Right, so the general rule, at least in the US right now, and this number changes, it fluctuates, right? But last I checked, your kids can receive up to $12,550 or $12,550 in a year in what we call earned income. In other words, income they receive in return for performing services without filing or paying taxes. Okay. So let's say you have a 15-year-old daughter, you pay your 15-year-old daughter $12,000 and she helps you sort paperwork for your business and develop your website. She deposits the money in her own bank account. That's legit. There's nothing wrong with this. Your daughter's 15. She has some agency. She has some skills that can help you in your business. She's actually doing work. You're paying her for real work and she keeps the money. Yes, your business can take a deduction for that. It's a legitimate business deduction and your daughter falls under the exception, does not have to report the income. Right? Oh, Tony, this was just marketed to me and your son is 17. Yeah, look, if your son is 17, if he has skills that help your business and you're paying him a normal market rate wage for those skills and he's actually doing work and your son keeps the money, then this works. And as long as he stays under 12,550, he doesn't have to report it. Over that, he has to start filing returns. Right? So this can be done legitimately. But here's the problem. And this is where I see it turn into a scam. What if your kids are too young to do real work for your business, or maybe they don't want to do real work for your business? Well, this is where you start to get in trouble. Yeah, see, Phil, this is what we're talking about. Pictures of your kids and paying them the fee for the publicity, right? Here's the problem, okay? So let's say I have a 5-year-old daughter. She doesn't have any skills yet. You know, maybe she's a prodigy, but let's assume my 5-year-old daughter My kids are actually much older. I'm an empty nester, but let's assume I had a 5-year-old kid. And you know, I want to funnel money to her tax-free and take a deduction for it. Well, I can't pay her for performing services for my business. She doesn't have any skills that can help me with the legal practice at 5 years old. But what I'm going to do is I'm going to use her name, image, and likeness in my marketing material, right? Phil, that's kind of what you heard about, right? Yeah, taking pictures of your kids, using it on the webinar for publicity, right? So I'm going to use my daughter's image and likeness in marketing, and I'm going to pay her $12,000 for that marketing. Super duper, okay? Now, of course, my daughter's 5. She doesn't have a bank account. So as is my right, legally, I put the money into my account. As her parent of the 5-year-old kid without a bank account, if she makes money, I'm allowed to put it in my bank account. So that's what I do. She doesn't have a bank account, right? So neither of us report the income. I don't report it because I'm saying it's my daughter's income, not mine. My daughter doesn't report it because she's 5 and it's under the $12,000 threshold, right? So again, magically, I've created a $12,000 tax deduction for my business without having to, I'm not out $12,000. I still have the $12,000, right? But I get this deduction for it. Why doesn't this work? What's the problem here? You guys have any ideas on why, as a former government attorney, I might be offended by this transaction? What's wrong with this? And again, this is, you know, Phil saw the example. This transaction is being actively marketed right now. It's very popular.
Looks to me like you actually haven't incurred a cost.
You're right, Bob. And that's the gist of it, right? A tax deduction is supposed to accompany an economic cost. That's literally what tax deductions are, is an offset for an economic cost. And I have not incurred an economic cost here, right? I still have the money. I've just paid money to myself again and taken a deduction for it. But I still have the money. I'm not out $12,000. If you get a $12,000 tax deduction, then unless, you know, there are exceptions, things like depreciation, but that's a different setup, right? Unless it's something like that, I'm supposed to get a $12,000 tax deduction to offset a $12,000 cost, and I've had no cost here. You know, even if my daughter did have a bank account at 5, you can open a bank account for your 5-year-old. As her parent, I would be the trustee of it. I would still have complete unfettered control over it. So again, I still have the $12,000. I haven't lost anything. The other problem here is, you might remember from the previous slide, that $12,000, $12,550 exception for kids applies to earned income, right? This is not earned income. This earned income is a payment for a service performed. My kid has performed no service. I'm paying my kid for intellectual property. That is not earned income. So the exception does not apply. In fact, if it's not earned income, it's something like $1,200 is the rule here. So if I paid my kid $12,000, she would still, my daughter, my 5-year-old daughter, now I would fill it out and sign it, but my 5-year-old daughter would have to file a tax return for this because this is not earned income. So she would still have to report this and file a tax return for it because she didn't perform any services. The other problem is, how did I come up with a $12,000 value for my daughter's name, image, and likeness to use in my marketing material? What research did I perform to determine that my daughter's image and likeness is worth $12,000? How do you come up with that number? You're supposed to be paying fair market value for this stuff, right? You have to, I have to be able to document that that's the fair amount. And, you know, surprisingly or not, when I've seen examples of this transaction, the amounts they're paying their kids for this, for some reason, all of their kids' image and likeness just happen to be worth a few dollars less than the filing threshold. All of them just happen to be worth that, I'm sure, by total accident, right? So those are some of the problems here. All right, so let's talk about this one. I've seen this one promoted less lately, which is great news, but I still do see it sometimes. This was promoted much harder about 15 or 20 years ago, but I still see it happen. I still have clients come to me in my legal practice, and I look over the tax situation, and I still see that sometimes they have fallen for this one. Let me see, what's the question? It's Phil, if your business has a separate account that actually pays your daughter for publicity, where money moves from the entity to your daughter's account, would that be legal? Well, it's legal in the sense that you're allowed to do it. but you're not going to get, I don't think you're going to get a deduction for it, right? Because if, especially if I have control of the money in the account, I'm paying myself, right? Depending on how old the kid is. You still have to come up with a good business reason why you had to do this. Because, most people they put pictures of their families in there all the time. The fair market value of my daughter's image in my marketing is going to be close to zero. It's not going to be $12,000 because I could have had her in there for free and it would have been fine. So that means the fair market value is very, very low. And if I still have control of the money afterwards, even though I'm paying it out of my separate business account, I'm still just paying myself and I still have control of the money. I haven't lost control of anything. I'm just taking a deduction for it. And because it's not earned income, my daughter would still have to file a tax return because she didn't perform services. So this notion of setting up your business in a no tax state, right? I see this this used to be all over the radio and the internet and everything, right? I see it less, but it does still happen. So like some of these other examples, again, there's nothing inherently illegal about doing this. You may have very good reasons for setting up your business in Nevada or Wyoming or states with lower no state income tax, right? People do it all the time for legitimate reasons, and that's okay. And so let's say you live in New York and you're running your business in New York. That's where you live and work. That's where your business is. New York has higher income tax rates. You've heard that Nevada has no state income tax, which is true. So you go set up your LLC in Nevada. You dissolve your New York LLC and you go set it up in Nevada instead, right? Now, since your income is being reported by a Nevada LLC, you don't pay any state income tax, right? So magic, once again, it's magic. So with a very cheap and simple online filings, all of a sudden you've eliminated your state tax liability. You're not paying state income tax in New York anymore, right? What's the problem here? Anybody have an idea why, as a government attorney, I might want to go after something like this? What I think is wrong with it? Why doesn't this one work? Like I said, people still try this. Less, thankfully, because I think the education is getting out there. I also know because when I worked for the government, we shut down some of the promoters of this transaction. It's not even a transaction, this notion of doing things. Right, so this doesn't work because if you live in New York and you work in New York gets its cut. Period. End of story. That's how it works. New York is not going to care what state you set up the LLC in. If you're living in New York and you're working in New York, then you got to file in New York. Doesn't matter where your LLC is formed. Just doesn't matter. Irrelevant. Still got to file in New York. And I'll say, because the LLC is set up in Nevada, it still has to pay annual fees to Nevada and file annual reports in Nevada, and you have to pay an agent annually in Nevada. So now you're incurring costs in 2 states. You have not eliminated any filing or tax requirement in New York because you still live, work in New York. So New York gets its cut. That's the law. No matter where the LLC is set up, you're just adding extra paperwork and extra fees and extra burden. So if you're going to go set up your LLC in Nevada, it's usually because you live in Nevada, or you're going to do some sort of business in Nevada, or there are other reasons to do it that have nothing to do with trying to eliminate your other state taxes, because that doesn't work. And let's talk about this notion of intercompany loans, right? And I'll kind of build off the previous example a little bit. So let's say you live in New York, you work in New York, you have a New York LLC, but you've been to one of my webinars. So you understand that setting up a Nevada LLC does not get you out of New York filing. You get that, okay? I still have to file and pay in New York. That's where I live. Cool, I get that. So I know that, but I still want to try and figure out how to reduce my New York liability. Can I use a Nevada LLC to do that? So I keep my LLC in New York, but I also set up a separate LLC in Nevada. And I go to Nevada, I open a Nevada bank account in Reno. I drop a bunch of money into that LLC's bank account up in Reno, okay? Now this Nevada LLC, it has only one business operation. This is the only thing it does. It loans money to my New York LLC and charges it a market rate of interest. That's all this Nevada LLC does. It has money in a Nevada bank account, and I even write up a little loan agreement between the 2 companies, and my Nevada LLC loans money to the New York LLC, and it charges market interest rate for that, right? That's its only business operation. It does nothing else. So now my New York LLC is taking a deduction for the interest payments, right? Interest payments on business loans are deductible. So I'm taking a deduction in New York, And now because the Nevada LLC is in a no tax state, it earns interest income, but it doesn't have to pay tax on it. Right? So again, a little bit of magic. I've had to go to a little bit more trouble this time. I had to fly to Reno and back. But I've created a monthly or annual interest deduction in New York without having to outlay cash outside of my control. What's the problem here? Why might this not work from the government's perspective?
Double dipping.
Sorry, Robin, what was that?
I think you're double dipping.
Well, I don't know if I would call it a double dip necessarily, but it is money going in a circle. One company loans money to the other and the other one pays it back. And I have incurred no real economic cost here, right? So, there's a number of ways the government might go after this. They might just look at it as a circular transaction without a legitimate business purpose and just unwind it. The government can do that. They can unwind your transactions. They have that power, right?
Okay.
We call it the substance over form doctrine. The government will just come in and unwind the transaction and treat you as though it never happened. And so they may just unwind it because you don't have a real purpose for this money going in circle. There probably is no real purpose for it because, like we said, the Nevada LLC has no other business. It is not a lender of money, right? It's not a bank. In fact, if you were going to set it up as a lender or a bank to the general public, to more than just your own company, you now have to register in Nevada as a lender in a bank and register with the federal government. And, all of a sudden it becomes a massive hassle to do that you're not willing to go through. Its only purpose is to loan yourself money and collect it back again, right? But you keep control of all the money. Plus, look, if your business needed a loan, you could have just loaned it your personal money. It would have been simpler and easier. Or you could have just contributed. Look, you contributed all that money to the Nevada LLC. You could have just dumped it into your own LLC with no tax consequence on your end there. It just would have been simpler to do all that, right? So, and other ways a government might go after this, there are what we call combined reporting states, where if you own multiple businesses and you're the sole owner or the majority owner of multiple businesses, they might combine them into a single tax report, they call it, and take into account the income and expenses of all of them combined. So then they just pull all of it into the state. That's another way they go after it. Okay, so now let's just talk about in general warning signs and watching out for red flags, right? So we looked at some specific examples, but what are some more general propositions and problems we should look out for? All right, so one of them, different transaction types to avoid, general transaction categories you want to avoid. One is the circular transactions. Paying money in a circle, paying money to yourself around in a circle without a legitimate business purpose just to generate tax benefits. Did some of our examples maybe fit this definition? Did some of them look like just paying money around in a circle, claiming benefits for it? So it's always a huge red flag. Another one is taking offsetting positions, offsetting investment positions, offsetting economic positions, and then reporting the loss on one side, but not the gain on the other side, right? So the classic example of this is I'm gonna, maybe there's a stock or a currency I want to invest in, or I was gonna say cryptocurrencies, but they're, sorry, from a government administrator standpoint, they're not currencies, they're assets, crypto asset standpoint. If I'm gonna take a short position and a long position on where this asset is going to go, and I know that, I don't know which way the asset's going, which is why I'm taking the short or the long. And you're allowed to do that. You're allowed to take an economic straddle. That's legal. But what's not legal is saying I'm going to report the loss side as a deduction, but I'm not going to report the income side as a gain, right? So normally when you take offsetting positions to straddle something economically, you report the loss and you report the income, and they're supposed to narrow your risk field. And you end up netting out one way or the other. But people play games with this so that they're reporting the loss on one side, but they're not reporting the income on the other side. So watch out for offsetting positions that do that. It's a huge no-no. A lot of the famous tax shelter transactions, things called boss and son of boss, this is what they were built around. And then the big category is you want to watch out for transactions lacking in economic substance, right? Well, what does that mean? Economic substance is kind of the fancy legal term that we use. But what we're getting at when we say economic substance is that a legitimate business transaction has a non-tax business purpose that makes sense in the economics of your business. A legitimate thing you're doing in your business is something that makes sense for you because it makes sense for your business. You would do it even if it had no tax benefits because it's a benefit to your clients, your business, yourself. You have plenty of business purposes for doing it that are unrelated to the tax benefits. It may also have tax benefits, but those tend to be the icing on the cake, right? You do this because it makes sense for you and your business. You have a non-tax business purpose for doing it. That's something that has economic substance. A transaction that does not have economic substance, or what we call also abusive transactions, they only make sense when you look at the tax benefits they create. So a transaction that does not have an economic substance is something you normally would not do if it did not have the tax benefits. The tax benefits are the only reason you're doing it. In fact, maybe without the tax benefits, this would create a loss for your business. So it would really not make sense. But after the tax benefits are coming into play, now you're making money on it, right? So that's what makes it abusive, is that you don't have a non-tax reason for doing it. It doesn't actually make sense for your business to do. You're only doing it to create the tax benefits artificially. That's a transaction lacking economic substance. So do you think some of the examples we looked at maybe fit that as well? And learn to trust your instincts on this. And this is developed over time, right? Trusting your instincts, developing your intuition can be practiced and developed like anything else. So some things to do to try to develop that intuition here. Watch out for promises of specific tax savings, right? Someone's talking about, oh, if you let me help you do this transaction, if we work this out, right? If you do this thing, it's going to save you X amount of money. That is widely considered unethical in tax practice, and it is often illegal, right? You cannot make specific promises of tax savings. Look, I'm a tax attorney in private practice. I help people save taxes all the time now. I never, ever, ever make promises of tax savings. Never. I can't. It's unethical and illegal for me to do so. That's just not how the tax laws work. I don't know for sure how much you're going to save. If we set it up right, the hope is you will over time, but I can't promise that because it doesn't always work out the way we think. The tax law just doesn't work that way. The tax law is not like a speed limit. The tax law is complicated and subtle and fact specific and constantly changing, right? It's not like a speed limit where you know which side of it you're on. So you just can't make that kind of promise. Be suspicious of stories where they said things like, hey, I saved X number of people some highly specific amount of taxes. And the best example I saw recently of this, I saw someone giving a webinar to try and get people to come use their tax prep business. And they said something like, on my last webinar, there were 231 people on. And in total, I saved those 231 people $6,387,432.87. No, you didn't. You couldn't possibly know that. You have no way of knowing something like that. You could only know that if you got all 231 people on your webinar, on your free webinar, to give you last year's tax returns and this year's tax returns, and you reviewed all of them and calculated up differences and pinned down which transactions change and which ones came from your webinar and which ones did. No, you don't know that. You have no way of knowing that. You can't make that connection. Right? And yet I see people making claims like it. It's completely made up, bogus. Be super suspicious of claims that they have repeatedly fought the government and won. And you're going to hear this all the time. Oh, we fought the IRS, work for us because we'll defend you, and we beat the IRS all the time. We beat the government all the time, right? We're constantly beating up on the government for you. We're going to fight for you. I'm going to stop share for a minute because I want to make this point clear, right? In 18 years of prosecuting tax cases for the government, do you guys want to guess how many cases I lost in 18 years? Drop it in the chat. How many cases do you think I lost? Tony says 0. It was more than 0. I'll tell you that. I lost more than 0 cases.
5.
Less than 5.
3.
Phil says 1. Phil, you got it. In 18 years, I lost 1 case as a tax prosecutor. So when you hear people say they beat the government all the time, how realistic do you think that is? If I lost 1 case in 18 years, right? The government does not deliberately prosecute innocent people. Why do you think that is? We don't have the time and the resources and the energy for that, right? We didn't have the time to go after the guilty people we wanted to go after. So if I brought a case forward, it was because I thought I had a really strong case. For it even get to the point where I'm bringing it forward, I was extremely confident in the case, right? If I came across someone who I thought didn't know the taxes, we didn't fight about it. I just let them out of the bill. I said, sorry for the inconvenience, you don't have to pay. It's not how things work, right? Sometimes when they claim they beat the government, they're literally lying, because I saw people lying about cases where I actually knew what happened in the case because I was there, and they're claiming they won. And I'm like, no, you didn't. I was there. I know you didn't win. I was part of that case, right? But because I was part of it, I also couldn't speak up and say anything. It's all attorney-client privilege. So I had to keep it confidential. Sometimes when they claim they won, all they mean is, like, the government said, hey, you're being audited, and they submitted the documentation, and the government said, okay, sorry, you don't know anything. Well, that's not beating the government. That's just giving them the information they asked for and then going away. Don't believe promises of paying zero tax legally, right? At a certain point, if you're making the kind of money that we would all love to be making, you're paying tax on it. The more profit you make, the more tax you pay. That's how it works. There are 2 ways to pay zero taxes legally. I'm gonna give them to you right now. This is fully legit, fully legal from a longtime government tax attorney. Let me tell you the 2 ways to pay zero taxes legally. Make less money and spend more money. That's how you pay zero taxes legally. Make less money and spend more money. Probably not what you wanted to hear. So again, keep trusting your gut feeling, right? Look out for things like magic bullets. You know, some of the things we looked at kind of sounded like magic, right? Or like card tricks, because they really were. Remember, every tax benefit has a corresponding economic cost. That is literally what tax benefits are. That's what they are, is they are offsets for economic costs. That's the entire point of a tax benefit. So every tax benefit should have a corresponding economic cost. So if someone is selling you on a tax benefit that doesn't seem to have an equivalent economic cost, that's a problem. And a lot of those examples we look at, there was a tax benefit, but I wasn't actually economically out anything. I still had all the same money that I did at the start, but I had a tax benefit. So if they're saying you can take this great tax benefit, but you get to keep the money, there's something wrong there, because that's not how the tax law works. Watch out for artificial and unnecessary transactions. This is that notion of economic substance, right? So always ask yourself, if not for the tax benefit, would I still do this? Right? Now, if you would still do it without the tax benefit, because maybe it makes your business more efficient, maybe it saves you money, maybe it helps you serve clients better, then go ahead and do it, right? Still be careful with the tax benefits and making sure you're claiming them properly. But if you are only doing it for the tax benefit, there may be a problem. And the big one, of course, if it's too good to be true, then it probably is, right? Just always keep that in mind when it comes to this tax stuff. If it's too good to be true, it probably is. Now, your business is actually going to do much better if you just follow the rules. Your business, your personal life, whatever it is, right? And remember, it's really not that bad. We have a quote going back over 100 years to Justice Oliver Wendell Holmes. He said, taxes are the price we pay for civilized society, right? Teachers, roads, firefighters, this all has to get paid for somehow. If there's no tax for the government, we don't have those things. It's just that simple. And paying lots of tax usually means you're making lots of money. I tell my clients all the time, getting a massive tax bill is a problem you want to have. If you are reporting your income properly, if you're claiming all the deductions you're entitled to, and you're still getting a huge tax bill, it means you're doing great. You should celebrate. There's actually another quote from an old Lyndon Johnson days, Treasury Secretary in the Lyndon Johnson administration. He used to say something like, I wish I could remember the exact quote, but the gist of it was, if you get paid $1 and you pay 50 cents of it to the government, you're better off by 50 cents than you were before. And believe it or not, especially if you're a business owner or service-based business, the tax system has chosen you as a winner, right? Our tax system, there's a number of things that I think are wrong with it as a longtime tax administrator. One of the things that's wrong with it is it picks winners and losers. I don't think our tax system should be picking winners and losers. I think that creates a burden on the economy that drags everything down for everybody. but it's what we have. It's what it does. It does pick winners and losers. And if you're a small business owner, especially in service businesses, you've been chosen as a winner. So act like it. Take advantage of it. You're beginning all kinds of benefits. Go ahead and take them. It's legal to do it. There's a whole long list of ways to reduce your taxes legally. And this is the thing that always gets me. It's so much simpler to just comply with the law and reduce your taxes legally and save money than it is to get involved in these scams. Reducing taxes legally is less trouble. It's less effort than setting up artificial transactions to do it illegally, right? And it doesn't get you in trouble because it's legal. And yet people do the scams all the time. They go to extra effort, extra trouble to set up the illegal transaction. And then they end up getting in all kinds of trouble and paying penalties for it when they could. There were ways to do this legally if you just relax, right? But what leads us to fall for these scams and go to that trouble is this anxiety and fear. We're afraid of the tax man. We're afraid of paying taxes, right? And so we want to be told something. The folks selling these things are telling us what we want to hear. I can help you. I have the magic wand. I'm the one who can beat the IRS. I have the magic bullet. It hits us right in our gut, right? They know how to push our emotional triggers. And getting audited and defended, right? You don't want to set up red flags and do this. Now, if you're in business long enough, you're going to get audited, right? It's just the way it is. But you don't want to get audited more than you have to. It's costly in terms of time and money, and it distracts you from your mission, especially if you have something complex, right? An experienced tax attorney like me is going to charge you somewhere between $500 and $1,000 an hour to represent you in real tax litigation, right? Look, I'm a California tax attorney with close to 20 years experience. My rate for defending you is closer to that $1,000 end, right? So I've had some people say, hey, will I defend them? And when I say the rate, I'm like, look, I don't think this is gonna be cost effective for you. If you're getting hit with a $10,000 tax bill, it's not worth it hiring me because I'm gonna end up charging you more than just if you just pay the bill. And the price for getting caught in these abusive transactions is extremely heavy, right? It used to be that the government would go around catching these scams and transactions, and they would make people pay back the tax, and people would say, oh, my bad, and they would pay back the tax, right? But then they would go out next year and do it again and play audit roulette and hope they didn't caught because there was no real cost to them. They thought, if I do this transaction 10 times and I only get caught 5 of those times, I've still made money on the other 5. And so it became a rational thing to do to engage in tax scams and abusive transactions. It was the rational choice because there was not a huge consequence. I do it 10 times, I get caught 5 times, and I say, oh, my bad, and I pay back the money, but I still save the money on the other 5, right? Because the government can't catch me every time. Well, the government has changed the calculation on that. They've changed the incentive structure now. Right? So now when you get caught, first of all, they're catching you more often because they have highly sophisticated computers doing data matching of millions of things a second. So it's harder to get away with it. And when you get caught now, you don't just pay back the tax, right? I mean, you do owe the back taxes you would have had to pay anyway. You also pay interest on that tax that compounds daily for as long as you haven't paid it. You owe a penalty, we call it an interest-based penalty, that doubles the interest that you owe. And you owe another penalty on the abusive transaction ranging from 25% to 40% of the tax, depending on how bad the government wants to hit you or what they think your intent was. Anywhere from what we call an accuracy penalty to a NEST penalty, a non-economic substance transaction penalty. So now you're looking at, and especially since you usually get caught 2, 3, 4 years later, right? What are you paying back? You're paying back double, triple, or more of what you would have owed, right? So now if I do this transaction 10 times and I get caught 5 times and I'm paying back triple what I would have owed, now it's a loss for me and my rational choice is not to do this anymore. So they impose this to change the decision-making tree. That's why it's penalized so heavily. So get educated so you understand how and why the laws work the way they do. The tax system has a certain logic to it. We don't have to like the tax system. There's lots of things I think it does wrong and a few things it does right, but there is a logic. There's a how and why to it. And this knowledge is power. So learn how it benefits you to do it legally. Like I said, it's easier to do it legally than it is to do illegally. But doing it legally sometimes doesn't have the same emotional resonance for everyone. Get over that tax anxiety, fear of the tax man, fear of getting audited, fear of getting a big tax bill. That's sabotaging our business growth. It's sabotaging our income growth. We're holding ourselves back, right? That's a subconscious abundance block when we're worried about taxes, right? It stops ourselves at a subconscious level from growing and building our wealth and our business, our income, and serving more people and helping clients because we're worried about this. But if you're following the law, there's nothing to be afraid of, right? So you can be visible and make lots of money and not have to worry about it and realize that in the end, if you get a big tax bill, that is one thing to celebrate because it's a sign of how much success you had last year. It's just another visible proof of how great you're doing and how many people you're helping. So what do you do with a lot of this stuff? I mean, I run these free webinars, but how do you keep learning how the laws apply to you, the tax laws, other laws? The tax is just one of the things I teach. How do you comply with them? What are the steps you take to protect yourself, your clients, your business? And how do you be visible without fear of legal trouble or tax trouble? So this is why I have something called the Second Saturday Legal Workshop Series. This is something I started this year that's getting a lot of great feedback. Those of you that have followed me for a while know I used to run a lot of courses. I run fewer courses now. I have been converting everything into workshop format for a number of reasons. Seems that, the primary reason is more people seem to be getting more value and more help out of it, and people like it better, right? Again, if you're ever curious what your clients want, ask them. My clients wanted a lower investment for more focused stuff with a less time commitment where they could get out with action. Great, I can do that. We'll turn things into workshops, right? So it's about getting unstuck and taking action. My workshops are very practical. They're not super theoretical. It's hands-on instruction where we do, love seat coaching and helping each other in small group breakout time on the most important legal and tax issues. Knowledge and action items that you can actually use in your business, not just stuff you're going to learn for the sake of learning it. Not that learning is bad. I love learning. If I had extra time, I would go back and audit college courses all day because I love the learning process. I try to keep it affordable in terms of time and money. So you're not spending thousands to learn one subject and then thousands more on the next subject, on the next course, right? There's always the bigger, better, thousands more course or package coming after that. That's not how these workshops work. And you're not committing 6, 8, 12 weeks or more of your time to it, right? A lot of my courses, other people's courses, I know some of my courses ran as long as 8 weeks. Other people have longer courses. And it becomes difficult to do that much time. The daily homework, the weekly Q&A calls, right? And in today's world, we all have a lot going on. It's hard to make that time commitment, which is why I'm switching over to the workshop format. That's why I've been doing it this year. And that no daily homework. And then look, the workshops are on the second Saturday of each month. So it's a nice regular schedule. You're only committing, depending on the subject matter and how deep we're going, 3 to 6 hours at a time. So instead of 6 to 8 weeks at a time, it's a half day or 2/3 of a day, basically, once a month. The hands-on instruction is very understandable. Again, I try to keep these practical, actionable, hands-on stuff you can use immediately, highly focused on specific subject matter one at a time. You're getting honest advice from me on how the law really works. I'm on a real rant right now about attorneys and so-called legal experts and whatnot who are not giving great legal advice and tax advice, who in my view don't really have your best interest at heart. They're promoting things like these tax scams. They're promoting legal scams in other areas. They're more concerned about the slick sales presentations and the credit card number than they are about giving something you can actually use. And look, as a former government attorney, I'm not going to pull punches with you. I'm not always going to tell you what you want to hear, and I'm not going to sugarcoat it. But telling you what you want to hear and sugarcoating the legal stuff is not helping you at all, right? It might generate more sales for me, but it does no good for you. So as a longtime government attorney, I'm just going to tell you this is how it works, and this is how we're going to get creative, and this is how we're going to fix it, and this is how we're going to protect you. We're just going to, we're going to figure it out. But I'm not going to sugarcoat it or tell you what you want to hear. Again, action items that make sense. And some of the workshops, it depends. A lot of them include sample language you can use, checklists, spreadsheets, all kinds of different stuff, actual tools you can use. I never used to give out a lot of sample language. My big problem with giving sample language is if I don't give you the proper training on how to use it, it gets misused and it does more harm than good. This is why I generally don't sell things like templates. I'm not one of those attorneys who likes to sell you one size fits all templates with no training on what to do, because you're going to go out and hurt yourself with it. It's like me giving a hammer to a kid and not telling them how to use it. They're more likely to cause damage than do any good with it. I just realized I compared you to kids. That's not really what I meant. I hope you got the gist of the analogy, right? But now I can do some of this sample language because in the workshop, we're highly focused on what you're going to do with it, right? And these templates and spreadsheets, we're talking about what we're going to do with it specifically. So it's helpful and useful to you, right? I'm teaching you how to use the hammer, not just handing you a hammer. Oh, thank you, Tony. I appreciate it. That's very kind of you to say. So coming up this year, so my next workshop, the second Saturday of June, I think it's June 11th, we're talking about events and retreats. Those of you that are interested in running live events, live retreats, virtual events, virtual retreats, we're doing the legal aspect of this. So what's the paperwork you have to have in place? What are the legal risks associated with events and retreats? What's the difference between an event and a retreat, right? It's more of a practical difference than a legal retreat, or than a legal difference. But how do you protect yourself? How do you be fair to your clients? How do you work with any business partners involved? What's the difference between live and virtual? Because I've seen people making mistakes where they're taking the waiver form they used for their live event and they're using it for a virtual event, or vice versa, and it doesn't work because they're not the same thing. You have to address different legal risks. In July, we're going to talk about logic and evidence. I'm doing a lot of critical thinking and logic training lately. So in July, we're going to do a workshop on logic and evidence and how you can incorporate that into your business decision-making and make better decisions in your business. Coming up in August is how to protect your content and your intellectual property. What's a copyright? What's a trademark? What's a DBA? How do you need this stuff? Do you not need it? Is it worth the trouble? Is it not worth it? What paper, what kind of language do you need in your contracts with your clients to make sure people don't steal your stuff, to protect yourself? So protecting your content, your IP. In September, we're going to talk about a subject that nobody wants to talk about, but you have to know about. Is what to do when you get sued and subpoenaed, right? This is not a fun subject to talk about. I find it fun because I'm a legal nerd, okay? And because I work for the government. But for most people, it's not a fun subject, but you have to know about it. If you don't know about it, it can literally ruin your life. It's one of those kind of things, right? You guys remember the Monty Python sketch? Nobody expects the Spanish Inquisition. You guys remember that one, right? Nobody expects to get subpoenaed today. You know, people are going to wake up tomorrow. Lots of people all over the country are waking up tomorrow, not expecting to get served with a lawsuit or subpoena. And yet thousands of them are going to be, and they won't know what to do. And if you mishandle it, literally what you do in the first few minutes after getting sued or subpoenaed can make or break everything. And nobody knows what to do with that stuff. It's crazy. And the longer you're in business, the more it becomes just a simple question of when this happens, not if, right? It's sort of probability that stacks up. October is my Create Your Contract workshop, which is probably been my most popular. I've actually run this one for a few years now. It's kind of what started my workshop series. This one's more of a longer, full day, in-depth workshop where you're getting some outlines. We're talking about what a contract is, what needs to go in it, and we're going to spend time workshopping together, breaking out into small groups, writing our customized contracts together and getting feedback from each other. In November, the legal aspects of affiliates and joint ventures, right? Those of you that do commission-based affiliate work, when you're promoting other people's stuff, they're promoting your stuff. We're going to talk about the legal aspects of this. That is another area that pisses me off. There's a lot of horrible legal advice going around on what to do with your affiliates and JVs that are getting people in massive trouble. And when it happens, it's like a ton of bricks dropping on them. They had no idea this was going to happen. So I'm going to tell you some things in that one that are going to shock you and go against a lot of conventional wisdom on that. A lot of this comes from my former government experience and seeing how this stuff works, right? In December, business formation, because December is when we start thinking how to structure our business for the next year. Do you want a corporation, a partnership, a limited liability company? How do you form it? Where do you form it? If you already have a business, how do we make the best use of it? What mistakes are you making that is causing you not to get all the benefits you're supposed to be getting out of the business you have? Do you want more than one business working together? Look, my wife and I run 3 businesses. She has a therapy practice, I have a legal practice, and together we have a limited liability company that's in charge of the webinars and workshops and stuff like this, right? That becomes complicated. Those 3 businesses all interact in different ways, right? I have clients who they have one business, it owns 2 other ones, one of them owns this one. That stuff is all very real life stuff that comes into play. Coming up in 2023, in January, we're going to talk about our legal priorities for the coming year. There's always more than enough to do on the legal and tax side of your business. And you can't do it all right away, and you shouldn't do it all right away. Otherwise, you'll be doing nothing else and you'll never get your work done, right? So we're going to talk about what do you prioritize for the upcoming year in 2023? What do you want to work on first? What's most critical for you? How do you prioritize? Because again, there's always more to do on the legal side. So don't get bogged down into it. Let's figure out the most important things that you can get done and get those done. In February, we're going to talk about client confidentiality, a massively misunderstood subject. How much confidentiality do you owe your clients, really? How much do you want to owe your clients? How much do you want to promise them? How much are you allowed to promise them? Are you promising your clients more confidentiality than you can legally deliver to them? Are you not promising them all the confidentiality that you can legally deliver? Hugely misunderstood subject. My clients tend to be coaches, healers, on the unlicensed side. And then I have lots of clients who are licensed therapists, psychologists, and doctors, clinicians, right? And so what's the difference between all of that? And how does all that interact? How do those laws come into play? March, just in time for the April tax deadline in the United States, we're going to do a tax filing workshop. We're going to go through examples, actual examples. What do the forms look like? How do you fill them out? I'm going to give you the spreadsheets I use in my business for my tax forms. My spreadsheets are designed to transfer easily to tax forms. Well, I'm a tax attorney, so I made my own method that works for this, right? So we're going to go through the forms line by line. We're going to go through examples. So you see which forms do you need and how do you fill out the forms line by line, right? April, we're going to talk about getting paid. We all want to get paid, right? How do we do it legally? What should our payment policies be? What are our collection policies? When is it worth it to go after and collect from somebody who's not paying, and when is it's not worth it? What do you want your refund policies to be and your guarantee policies? What if somebody's claiming a refund you don't think you owe? What do you do about that? So getting paid. So that's coming up in April. I'm still working out. I think in May, I might. So I just it's still May. Is it still May? God, time is, I don't know how you guys feel about 2022. I don't know where it's gone. I think it's still May. It is still May. That's crazy to me. So 2 weeks ago, we did a workshop on social media and how it affects not our privacy, but our clients' privacy, and what mistakes we're making on social media that are violating our clients' privacy rights, and we have no idea that we're doing it. There are people getting in trouble for this right now. There are people getting sued over this. Some clinicians are losing their licenses over this right now. They say something on social media that they think is completely benign, and they're losing their license or getting hit with fines because they have no idea how it all interacts. I think I'm going to do that again next May. I got so much great feedback on it and a ton of people who wanted to attend but couldn't. And then June and beyond, I've got a ton of ideas. You can see I'm kind of rolling. You guys can always email me and say, hey, I would love to see a workshop on XYZ, and I'll see if I can fit it into the schedule, right? Because I'm going to try and keep planning these a couple of years out as I go. So if there's a workshop on a legal or tax issue you guys want to see, shoot me an email. Ian, please do a workshop on XYZ, and I'll add it onto the schedule. First come, first served. Right, so you can go to secondsaturdayworkshops.com. I can drop it in the chat if you want to check it out. Right. So you have some options here. You can enroll a la carte, right? So you can just pick out. It may be that some of the workshops don't interest you, which is totally fine. I'm doing a pretty wide variety, or that you don't need some of them don't apply to you. So you can enroll just in the individual workshops that interest you most. Right? And right now on the website, everything up through the end of this year, up through the December business workshop, are all available for a la carte enrollment. I'm still setting up the, all the website stuff to enroll in the 2023 stuff. But you can enroll a la carte in just the ones you want, or you can do a 12-month package and get all of the next 12 at nearly 40% off. It might not surprise you to hear that most people right now are just choosing the 40% off because it's like getting half of them for free anyway. So, but if you want to do the a la carte enrollment, again, some people are doing a la carte, that's totally fine. It's whatever works for you. Scroll down the page, choose the workshops you want, sign up just for those. Most of them are only $197. Again, I'm trying to keep these affordable, focused, easy, right? So most of them are $197, 3 hours, maybe 4 at the max, low time commitment, low financial commitment, get in and out, get what you need. A handful of them, so the October, right now, the October, December, and March workshops are $497. That's because they're more of a full day, they're much more in-depth, and they come with a lot more of my resources and my own templates and checklists and stuff that I put a lot of work in developing over the years. So a handful of them are $497. If you prefer the 12 budget package, so look, if you were to pay, if you were to go through and just enroll separately for all of them over the next 12 months, I would not recommend that. But if you did, it would cost you a little over $3,200. Or you can get a savings in the 12-month package. So you can get access to all of the next 12 for one payment of $19.97 or 12 payments of $197. So again, if you end up doing like the the one payment of $19.97, it's like getting half of the $197 workshops for free, essentially, right? So if you think you're going to attend half of them, you're probably just better off doing the 12-month package. You get the recordings. All of them are recorded, right? Because some people can't make it to all of them. They can't make it to the whole thing. They have to leave early, or they have to show up late, or you have a conflict, you can't make it that day. So if you enroll in a given workshop, you get all of the resources for that workshop, any resources that come with it. You get printable slides to take notes on, and you get the recordings in case you can't be there, or in case you just want to come back and watch it later, right? So you get access to all of that. And then if you do the 12 workshop, then again, you get all of the resources and all the recordings for all the next 12. So again, I'm always telling people, stand in your legal power. That's our kitty cat Cinderella. We have 5 kitty cats, which sounds like a lot. For us, it's low because we had a couple of the older ones pass on over the last few months. But that's our kitty cat Cinderella, and she's the alpha of the house. She's always standing in her power. She does not brook no dissension or gab or nothing. She's definitely in charge, right?